Good evening, everyone. Welcome back to the channel. So today, the third day of August, we're going to discuss another daily stock video. And today we're going to discuss Enphase. This is another hot buzz stock that has been very popular over the last year or more. And it's been on a nice rebound, actually. And by the way, it seems like unofficially, I guess the bear market is over now. After Jim Cramer said it was, but nonetheless, it seems to be. I don't know if it's over or not, but it's been shooting up the last couple of weeks despite bad headlines, which is very interesting. But anyway, so let's look at Enphase. Let's go back to really the meme stock phenomenon era, 2021. Let's actually go back before then. So we had after the or during the pandemic, we had all the stimulus money that went out. We had like retail investors entering the market like crazy. And we had all these stocks that ran up. Well, Enphase was one of these. So Enphase is like a clean energy solar company. And I'll go over the bio of that company for anyone unfamiliar with it. But the stock right now is trading at 290 a share. If we go back to like 5 years ago, it was like $1.52. So this is one that everyone like dreams of catching early on when a stock like this is like $1 and then it like 300 X's. But if we look at the 52-week range, this is actually close to its 52-week high again, which is incredible. If we look at the year 2021, its last high was in November, 250. So it's actually blown past the November highs, which is so it that means that it's actually established a new 52-week high, which is quite remarkable. And this is actually, if you were looking at this at the beginning of the year, it's up since January, which there aren't that many companies that we can actually say that about, I think. It's exceeded the 1 year target estimate, so that may mean it's slightly overvalued. Price to earnings ratio is insanely high. That screams a big red flag there. That possibly suggests that this is being bid up way too high. Earnings per share is positive. But yeah, the price to earnings, I haven't really seen one that high. I haven't seen one that high that often, if ever. I'm not recalling off the top of my head one that I've seen that's that high. But the company's consistently beat earnings from Q3 2021. Even so far this year, it's consistently beat earnings. So, I mean, from that standpoint, it looks like it's performing well for beating earnings. But you know how that goes. All they have to do is raise the projections 1 quarter, then they can miss. Let's look at, okay, profile, because I don't know a lot about this company. I just know it's a buzz stock and I've seen it talked about a lot. They have 2,260 employees, solar company in the technology space, Fremont, California, um, near the San Francisco, Oakland Bay Area. It designs, develops, manufactures, and sells home energy solutions for the solar photovoltaic industry in the United States and internationally. They offer semiconductor-based microinverter, which converts energy at the individual solar module level. So, with all the clean energy revolution and all that, this is a play for that. Would I buy into this now? I don't think so. I think it's a little bit too high. This is one I wish I would have got into like when it dipped, by the dip. Because yeah, from January 23rd, it was 123 a share, and it's more than doubled since then. But let's look at the fundamentals, because before I make a judgment call on whether I would want to own this or not, or offer some education to my audience, not advice. I want to just see what the actual fundamentals of the company show. So I just saw on the last page $40 billion market cap, trailing 12-month total revenue. So revenue is increasing significantly. Revenue was doubled from 18 to 19, increased in 2020 despite the pandemic. Almost doubled again in 2021. Trailing 12 months, it's higher. But as most small cap companies work, as revenue goes up, cost of revenue also goes up in conjunction with it. Gross profits have been going up, operating expenses, operating income, both increasing, net non-operating interest, negative number, other income expense, pre-tax income, basic earnings per share is kind of staying flat. Diluted earnings per share increased slightly. Basic average shares, diluted average shares. Let's look at the bottom line here. Trailing 12 months is higher than the past year recorded. Total unusual items. Interesting. I don't see that often. Tax effective unusual items. Interesting. Um, so I see net income positive and increasing, so that's a good sign. Let's look at the balance sheet items real quick. Total assets, total liabilities. And I know this is kind of the boring part. Like most people don't like to look at fundamentals. Like I know a lot of the audience on YouTube just kind of, you just want to buy buzz stocks and trade on the buzz. But uh, for stock investing, I think we do need to pay attention to fundamentals. I mean, there are times if you want to gamble, you can trade buzz. I mean, I've done it before myself, but I wouldn't advise it. So total assets have been increasing, liabilities, capitalization, common stock equity, tangible book value. Now, book value is something Warren Buffett always looks at. So I think the price to book ratio, back when he wrote one of his first books, he looked for something under one, which you're not really going to find unless you're looking at like insurance companies. Um, so I think that metric would have to be revised, like it probably closer to like three or four. But that's an interesting nugget from Warren Buffett's playbook. But I think that metric, price to book, being under one, you're not going to find that very often in this market. So let's see, total debt, net debt. This isn't telling us a whole lot. Let's just look at the cash flows here. I mean, I see some good things and I see some concerns. So far, let's see, operating cash flow is positive, investing cash flow is negative. Let's drill down. Continuing operations, we're not going to look at all of that. Investing cash flow, they got hit hard here. Net investment purchase of investment. Okay, so they've made some capital investments, I guess. Cash flow from continuing. I'll probably do more videos on this and kind of study this more in depth. I intended this to just be a quick look, a quick kind of intro on this company, at least for my channel, because I've never talked about it before. So investing, financing cash flow is also negative. In the trailing 12 months, it was positive over the last 4 years. End cash position is in the black, positive. And then capital expenditures, issuance of capital stock doesn't show up since 2018. Issuance of debt, repayment of debt. Free cash flow looks really promising, actually. Free cash flow has it ballooned actually from 2018, 2019, 2020, despite the pandemic, still went up. And then it increased nicely in 2021. Trailing 12 months is showing a nice balloon from 2021. So yeah, I see a lot of positives in this company. It's certainly, I think it would be a better investment than Mullen Automotive, but see, Mullen is cheap, so that's going to attract a lot more retail investors, I think. But this one, and I was looking at this last week. I know it's optionable because I was looking at options because I don't like to spend more than like $100 on a share of stock if I can avoid it. So what I'd probably do, and my strategy has actually been leaning more towards LEAP options, which are long-term equity anticipation. Basically, it's a call option a year or more out. And I like those a lot because I've got bitten by these short-term call options, like just the way this market was moving the first 6 months of the year. Had a lot of them that I held too long, expired worthless. I netted some losses on several of them. So now, like if you get a LEAP option, which is a call option a year or more out, you give yourself time. And the way I look at it, this is maybe the THB method or part of it. Like I haven't really heard anybody else say this too much, but my strategy now, I'm looking at really replacing my stock investment with LEAP options because, for one, it functions very similar to holding a stock. Like if you're going to hold it for a year, it's almost like holding a stock. But the big benefit, number two, is that you have massive leverage. So for the same dollar amount, you're controlling way more shares because one option contract controls 100 shares. So what it would cost you to buy one option contract is way cheaper than what it would cost you to buy those 100 shares, and you have control over those 100 shares. So if that stock shoots up, like which is happening with Mercado Libre, which I covered yesterday, by the way, and I kind of got to slap myself a bit for selling that because if you see what the earnings did today, the stock's going to probably open over $1,000 tomorrow. So yeah, that was a little disappointing, but we'll see if things dip again. I don't know if we're going to get back to where things just consistently run up. I think there's got to be some bad news that kind of makes the market drop a little bit coming up here soon. Because I was looking at my Forex Factory site, and actually the unemployment number is coming out Friday, first Friday of the month. I mean, I know that anyway without following this, but I was actually looking at various things that are driving that will drive the market. And why does this keep doing this? Come on. Okay, August 3rd today. The one piece of significant news, PMI, ISM, it exceeded in a positive way the forecast. So that probably jolted the market. Tomorrow, we're going to get unemployment claims, which are projected to exceed projections. How's that for a tongue twister? Projected to exceed projections. Does that make sense? I guess. And then our trade balance, natural gas storage, and then FOMC member Mester. So FOMC is the Federal Open Market Committee, so it's part of the Federal Reserve. So those are some maybe not too significant because they're in yellow and orange. They're not red, but those are some potential drivers of the market tomorrow. And then Friday, the big one is the unemployment number, non-farm employment change, unemployment rate, average hourly earnings. So we're going to get three big jolts, which here's the thing. Back in July, the unemployment came in higher than projected, but the market went up. So we're in one of these weird markets again where bad headlines don't seem to matter. So back to this, just looking at some options here. So for Enphase, this is expiring Friday. And look at this. Some of these were up like 200% today. That's amazing because I thought the stock, well, let me look at what the stock, no, the stock was down. That's weird. So a couple of these were up. Maybe it's because of volatility swings. Like I said, I'm not an expert in options. There's still a lot I'm learning myself, but let's just go out to the leap. Because I'll show you for a $290 stock how much cheaper it is. I would probably go being bullish on this. Like I would go as high out as I could. So I'd look at like 420, 420, or 430. That would still, one of these would cost you like 5,200 at this price or 4,600 at the 430 strike price. So that's kind of high, but again, that gives you control over 100 shares. So if you were buying the stock for the same price, that would be at the current price 290 times 100. That would be $29,000. So you're spending 5,000 here to have control over 100 shares versus the 290. And what you see, I mean, because options shoot up way higher than the stock, obviously. Like if the stock goes up 20%, you can be up 200% in the options because of the underlying ways that they work. But anyway, that's my take on Enphase. I see a lot of good. I see some things that are concerning, like price to earnings ratio, but overall, I like it. And I'd probably open up a leap. I wouldn't buy into the stock myself, but that would be what I would do. So if you like that, please like, comment, and subscribe, and keep an eye out for my next stock video. Still don't know what I'm going to talk about tomorrow, but I'll come up with it before I record the video, obviously. So it'll be a surprise. Thanks again for watching. Take care.